You can see from this long-term graph on the central banks that they continue to buy gold at the highest levels recorded. What does that tell you? That tells you that they know that they are destroying whatever little bit of confidence yet remains in the market, because rapid inflation with all the mental manipulation that goes on, that will, and the loss of confidence, that's the key. It's that confidence piece that will cause the hyperinflation. Now, quantitative easing is money printing for free. So dropping the interest rates all the way back down and then just spewing out money. But as we've noticed, and that started in March of 2009, and every round of quantitative easing after that has less and less and less impact. Here we go. I mean, back and forth. So one day gold hits a new week high as U.S. data boosts rate cut expectations. What does that mean? Well, when the Fed pushes the interest rates down, then that's better for gold, right? Because it makes the dollar weaker, okay? But, you know, on the flip side of that, gold falls as bet on Fed cut waiver with data gap clouding view. So the point is Wall Street actually wants you to think all of this crap matters. Well, physical markets don't move that rapidly. The paper trading markets do. And so that's why they call spot gold gold and spot silver silver. It is neither one. It is merely a contract representation. And I am, by the way, based on the question that I had last week, so I will be showing you a chart on silver and where support is. But this is the piece that confirms that shift from the paper markets controlling the price action to the physical markets controlling the price action. So I was really excited when I saw this. Gold and silver surge amidst ETF outflow. And this is a market paradox. Okay, so what does this mean? Well, let me show you. First of all, they are referring to the spot markets because they never really want you to think of anything other than the spot markets of having validity. But can you see down at the very end of that, I just drew a square around there, how the ETF, Wall Street's used the ETF to manage, it's one of the tools that they use to manage the price. And I'm going to show you something in just a second, but bear with me. You can see the major outflows in ETFs at the same time that the spot price continued to go up.
A subtle but powerful change is underway. Even as gold and silver ETFs recorded heavy outflows in recent months, spot prices continued rising, an abnormal pattern that signals weakening influence from Wall Street's paper markets. Historically, ETFs were used to help guide and sometimes suppress price action by absorbing or releasing artificial ownership claims. But now, those departures aren't dragging prices down. This divergence suggests that the physical market, real bars, coins, and central bank demand, is beginning to dictate pricing. Many analysts see this as the early stage of a structural realignment, where tangible demand outweighs speculative contracts for the first time in decades.
That's just a teeny little trigger that most people would never, ever notice. But the reality is, it is a confirmation of this growing structural shift in the gold and silver market away from the paper markets and into the physical markets guiding the pricing. So I'm super happy to hear it. It doesn't happen like that. So as I come across it, or if you come across this, share this in this forum. It's a great place to do it since we're live. But I also wanted to point this piece out, and boy, it's really small, so forgive me on this. But this is the cross-asset markets for gold. See that little teeny weeny line up on where that arrow is? Okay. Well, that's the ETF market. The over-the-counter market, the OTC, and the exchanges are far, far bigger. than that itty-bitty OTC market that we can see it, or not OTC, the ETF market that we can see it. So this shift is absolutely happening. It continues to evolve. And frankly, I look forward to the day when it is the true supply and demand market that is giving us accurate pricing. Now, do I expect Wall Street to ever tell us what the true fundamental value is? Well, not for a very long time. But ultimately, yes, because when the central banks need to regain, or the governments make an attempt to regain your confidence as we are in that hyperinflationary event, then we will see gold begin to move toward its true fundamental value.
Global central banks continue buying gold aggressively, with annual purchases reaching some of the highest levels in modern history. This accumulation reflects a deeper concern: declining trust in fiat currencies. Since 2022, inflationary pressures, geopolitical fragmentation, and rising debt loads have pushed governments to seek stable reserves outside the U.S. dollar. Even recent IMF reports acknowledge that gold's share of global reserves is growing. Central banks know confidence is fragile, and once public trust weakens further, inflation can accelerate into something far more dangerous. Historically, periods of monetary uncertainty drive gold toward its true fundamental value, far above current paper market pricing.
You can see from this long-term graph on the central banks that they continue to buy gold at the highest levels recorded. What does that tell you? That tells you that they know that they are destroying whatever little bit of confidence yet remains in the market, because rapid inflation, with all the mental manipulation that goes on, and the loss of confidence, that's the key. It's that confidence piece that will cause the hyperinflation. Now, quantitative easing is money printing for free. So dropping the interest rates all the way back down and then just spewing out money. But as we've noticed, and that started in March of 2009, and every round of quantitative easing after that has less and less and less impact. So even when they do it now, it's kind of like pushing on a string, and it is not stimulative at all. But I do think that what's going to drive that hyperinflation is a more rapid bout of inflation. I think we have that in the very, very near future. And that the complete collapse of confidence, that's what will usher in the hyperinflation. And the tool that they're going to use to create that money are your purchases. So that's the first part. I have not checked out Simon Dixon, but I will. Let me write it down. And are we a vassal state? Well, yeah, I mean, we're not a democracy. We really, even though we have the title, we haven't really been a democracy in an awfully long time.
Modern monetary policy relies heavily on tools like quantitative easing and rapid rate cuts. But each new round of stimulus has delivered diminishing returns since 2009. Today, pumping liquidity into the system feels more like pushing on a string than igniting real growth. When inflation surges again, and many economists expect renewed pressure as deficits expand, what truly matters is confidence. Once households and businesses lose faith in a currency's purchasing power, inflation can transition into a hyperinflationary spiral. If such a scenario unfolds, governments will attempt to restore trust, historically by repegging value to gold or revaluing official reserves dramatically higher.
Quite honestly, President Trump's job is as a change agent, because we have to shift into a completely new system. Is he selling us to Saudi Arabia? I mean, I don't know, but can you see why it's so important to become your own central bank and to create that level of community around you so that you have surety in all of the mantra areas: food, water, energy, security, barterability, wealth preservation, community, and shelter. because whether we're being sold down the river here or we're being sold down the river there, we have to take personal responsibility for where we are in this world and what that future looks like. You know, we can sit here and do nothing. And, you know, quite honestly, you got to understand that is a choice. And if you make that choice, then you have to accept the consequences of that choice. Or we can come together and take our power back, which is what I think that we need to do. And that's what I'm personally fighting for. For people that don't have a voice, for people that don't understand what the real problem is. The real problem is that there's not sound money in the system anymore. The real problem is that the Constitution, where the individual was the head, that's been turned upside down. And now we're slaves to the government. We need to take our power back, and we can do that if we come together. One person can't, but 3% can.
Whether or not governments manage inflation correctly, individuals face the same responsibility, protecting their own financial resilience. Real wealth preservation relies on fundamentals: food, energy, community, and sound money. Gold remains a form of savings that cannot be printed or defaulted on. The modern system places corporations and financial institutions above individuals, making everyday savers the right size to fail, while large players receive bailouts. When markets correct or major stocks unwind, as we saw with speculative tech corrections through 2024, average investors are the ones left holding losses. Building personal and local economic resilience is becoming essential, not optional.
All of those private corporations, whichever area that they're in, they are the ones that are in control. And that was an agreement that started in 1914 when they converted corporate debt into Federal Reserve notes. And the Federal Reserve that issues this stuff is a corporation. Why is it okay with you to work for corporate debt? I'd rather work for sound money that can't be inflated away. So I understand how important trading dollars for gold is. If we do not do this, we are in big, big trouble. 100%. 100%. And it's not necessarily us. Like, I'm 71. I figure I'm going to be around another 29 years, and I will continue to do this as long as I can. You know, I mean, there's really no reason why I can't continue to do this, because I've got to fight for you. I'm okay. No matter what happens, I feel like I would be fine. My family would be fine because of the choices that I've made. But it's not enough. We've been really separated so much and made to think that it's just all about you, and you're not having these conversations with your neighbor. And I'm telling you, that's all part of the plan to divide and conquer. And that's why we have to do just the opposite. That's come together and help each other. Even those that, and especially, frankly, those that don't understand what's actually happening. Because we're asking them to make a paradigm shift, and that's really a hard thing to do.
For over a century, the monetary system has shifted power away from individuals and towards centralized institutions. But major transitions, like those now forming in commodities, currency systems, and global trust, create openings for change. By understanding sound money, reducing dependence on unstable financial products, and strengthening local communities, people can reclaim a measure of economic sovereignty. Crisis doesn't just destroy, it reorganizes. The real question is whether citizens remain passive or act collectively to shape what comes next. If communities can unite around transparency, resilience, and fair economic structures, the next system doesn't have to repeat the imbalances of the current one.
Yeah, I do think that they could very well allow NVIDIA to crash. I mean, it's severely overvalued, the AI hype, and now it's all the talk about overvaluation. And, Warren Buffett and some big investors have pulled out of NVIDIA, and that kind of rings some bells. But remember, the public has also now been trained to buy the dip, buy the dip, buy the dip. This is a wealth transfer mechanism. The insiders are getting out at these very lofty valuations, and the public will be left holding the bag. Because even if you aren't going in and buying an individual stock, if you're putting your wealth in a mutual fund or an ETF or a 401k or an IRA or an annuity or any of that stuff, that's what you're putting your money in. And, frankly, if we don't come together, you are just the right size to fail. If, however, we come together in community, we're too big to fail and we can take our power back. I still think we're in the melt-up phase. And understand, too, that NVIDIA crashing, Bitcoin going below $90,000, which it did today. I mean, I can't tell you what it's worth, other than being able to move a lot of digits around. I struggle. I really struggle with the functionality of this stuff. And, this is just the physical representation of it. And it's supposed to make you think that they're good as gold. It ain't as good as gold. Never will be as good as gold because it has limited functionality and it's used in one place. This has unlimited functionality and it's used in every place. I mean, you can decide for yourself but my opinion and the reality is I'd rather go into this knife fight with a bazooka that has full functionality than something that's used in one place. And this is Ethereum, a representation of Ethereum. It's not a gold coin. This is used every place. That happened back in 1913 when they legalized the Federal Reserve. That's when they started the shift away from the Constitution and away from the individual as the head of the state. And then the state's supposed to support the individual and the federal government's supposed to support the state that's supposed to support the individual. How about we go back to that? How about that? We can do that. And that would be fine with me. That levels the playing field. And it means that all the effort that you put forth can be reasonably rewarded. Not top-sided, like it all going to the corporations and the 1%. Because isn't it interesting? Don't you remember during the COVID crisis where they talked about that K-shaped recovery, where the people at the top just kept doing really well, but the people at the bottom kept doing more poorly? And now I'm hearing that. You didn't hear K-shaped recovery for a while? I'm hearing it all over the place again. Is that okay with you? I mean, really. And if it's not okay with you, then do something about it while we can, while we still have those choices.